Happy Tuesday. Welcome to another edition of Tax Tuesday Live. My name is Kamar Yellis. I'm an enrolled agent. I've been doing taxes or in the financial and tax industry for over 35 years. I just had a birthday, so I can't believe it's been going on that long either. But today we're going to talk about a couple of things today. The main thing we're going to talk about today is end of year tax tips that small business owners can take to get ready for tax season. But we're also going to talk about some promises that your president made for getting rid of income tax and a couple other things about no tax, no tips. So again, it's Tax Tuesday. If you have any tax questions, feel free to throw them in there. If you're not ready or you're watching this on the replay, feel free to send an email to Tax Tuesday Live at gmail.com. Again, Tax Tuesday Live at gmail.com. Send any tax questions you might have over there, and I will add them to the show. But before we get going, too quick, I want to say happy Thanksgiving, happy holidays to everybody. And before we get into today's segment, let me light a candle. Gotta get the Zen right. Get everything flowing. This isn't working. Why isn't it not working? Oh, there we go. Got a light. Now, this is one of my favorite candle companies, so shout out to them. Southern Elegance. Right, so just get the Zen flowing in the room, get the vibes right before we get into everything. This one is going to be interesting. But before we get going again, make sure you share this. And if you've been rocking with me for a while, make sure you come in, introduce yourself, say hello. Make sure you have manners. You know we was all raised right. Let me know where you're hailing from, who you are. And let's get into it, y'all. Let's get into it.
Next couple of years, I think we'll substantially be cutting, and maybe cutting out completely, but we'll be cutting income tax. Could be almost completely cutting it because the money we're taking in is going to be so large.
So somebody sent me that, but let's run it back. One more again.
Over the next couple of years, I think we'll substantially be cutting, and maybe cutting out completely, but we'll be cutting income tax. Could be almost completely cutting it because the money we're taking in is going to be so large.
Okay. All right, now let's watch this one. We'll come back to both.
How's that no tax on tips going? How's that no tax on overtime going? I'm just trying to figure out how's that paycheck looking. We kind of just stopped talking about the fact that that was supposed to happen. And I'm just trying to figure for everybody who was like so gung-ho about it, how's your wallet doing? You know, what's that paycheck look like now that there's no tax on tips, no tax on overtime? Oh, wait, it didn't come out the way you thought? Okay. Funny how that worked out. Have a good day.
Have you been following what's going on with tax on tips? I know the president promised that they were going to eliminate any tax on tips. The IRS has come out with new guidance on that, and we'll talk about it in a moment, but let's watch this one more time.
How's that no tax on tips going? How's that no tax on overtime going? I'm just trying to figure out how's that paycheck looking. We kind of just stopped talking about the fact that that was supposed to happen. And I'm just trying to figure for everybody who was like so gung-ho about it, how's your wallet doing? You know, what's that paycheck look like now that there's no tax on tips, no tax on overtime? Oh, wait, it didn't come out the way you thought? Okay. Funny how that worked out. Have a good day.
All right, so if you have not been paying attention or not paying any attention to the political cycle of the media, the president said that he was going to eliminate tax on tips, tax on overtime. So we'll start with that clip first, and then we'll go back to the previous one as well. So there's no tax on tips, no tax on overtime. That was what he promised. Now, what's actually going to happen in real time and in reality for all our tax-paying people? What's going to happen is there is going to be a $25,000 exemption, or exclusion, meaning that you have to report your $25,000. And then what they're going to do is they are going to allow you to exclude $25,000 of income from tips. But that doesn't mean your tips will not be taxed. Because let's say you make $100,000 in tips, because there are a lot of high-end restaurants that get tips. A lot of people don't realize that a lot of high-end restaurants have servers that make six figures plus easily. So they were all gung-ho when they saw this no tax on tips, but that's actually not what's going to happen. So you still have to report all your income, right? And this is going to come out in tax year 2025. You have to still report all your income. But then when you're filling out the documentation, you have to make sure that you exclude $25,000 in the tax adjustment section of your 1040. So again, that's what was said. Now, going back to the very, very first clip, and if you're just joining me, you might have missed it, but I'll play it again at some other point throughout the show, that the president is saying that tariffs, T-A-R-I, how do you spell tariffs? T-A-R-I-F-F-S, tariffs will potentially wipe out income tax. I don't know if anybody ever paid attention to civics class. It literally takes an act of Congress to get rid of income tax or remove income tax, because income tax, for all of y'all who always say, is income tax illegal or not regulated or not in the Constitution. There is something in the Constitution that gives Congress the ability to tax United States citizens. So that's how it is legal. All right. But he is now saying or proclaiming or predicting that taxes will be eliminated by the tariffs that he allegedly, or that the country is going to allegedly collect. And that will then offset income tax. Now, that's kind of hard to believe, right? Because as we saw in that clip where they said, how is everything going on with the no tax on tips? Well, we know when people campaign to get into office, they make a lot of promises. And a lot of times when they get in office, they can't make good on those promises. So, we kind of saw, we know what the pattern is. The pattern hasn't really changed. Again, yeah, I got this new funky soundboards. I didn't even play for y'all, but let me do that real quick. You are now tuned in to
Tax Tuesday Live with Kamari.
Shout out to my guy Trendsetter for doing that for me. Again, you're all watching Tax Tuesday Live. This is something we are doing every week at 8 p.m. I asked y'all last week, what time should I start? Last week I started at 7, but then my man Jarrell said, go at 8. And he was the only one that responded. So we're going to go at 8 until further notice, all right? But going back to tariffs and taxes, it's highly, highly unlikely that tariffs are going to be able to cut out income taxes. So don't get excited, folks. Do not get excited, because more than likely, this is a bunch of caca or BS. All right. So the other thing I wanted to talk about with y'all, and again, if you have any questions about taxes, go ahead and throw them in the chat. Again, feel free to share this out with anybody who you might know needs help with taxes. I know it's not sexy. I know a lot of people don't like talking about taxes, but it's something we all got to deal with. So I've been tired of seeing all the scammers and the puffery or bullshit that's floating around. So I said, all right, I'm going to do a better job of coming out here and speaking to what is really real, what the IRS wants, what states want, what cities wants, a lot of times with taxes. And before I move on to the next subject, I got a call from one of my clients today before I even did this. And he said, Kamari, I now understand why you keep telling me not to do certain things. Because a lot of people call me a stiff neck, or they say I don't want to do certain things. But when you, meaning certain things with taxes, but when you've been around as long as I have, you kind of get a feeling of what works and what doesn't work. And sure, there are a lot of so-called tax loopholes, but then there's the real deal, what you have to do to qualify for it, or what you have to do if the IRS were to come and say, hey, you don't qualify for this. So he called me today. He said, Kamari, I just got a bill from the state of PA, and they're saying I owe them money. And I said, yeah, you do business in the state of PA. And he also does business in the city of Philadelphia. And he also does business in the overall United States. So that's 3 different tax situations, 3 different tax authorities you have to deal with. So in my case, that's why the name of my company is the Philly Tax Team. Dealing with Philadelphia is its own beast. Dealing with Pennsylvania is its own beast. Dealing with overall IRS is its own beast. So there's 3 different levels of bureaucracy that you have to deal with when being in business in Philadelphia. Other places, other states, it does vary. But at the minimum, it's usually at least 2. You got the state and you have the IRS, which is the federal. So you got the federal government, and then you have the state government. So you normally have to deal with both of those. And he said, man, this is a lot. I don't know how I keep up with all this stuff. And I said, you don't keep up with it very well. Just being honest with him. And then he laughed. And then he said, oh, that was harsh. I said, no, it's not harsh. It's just real. And so again, when you see people talking about the G-Wagon or getting the LLC or whatever, and you have to ask yourself, what kind of life do you want to live? Do you want a complicated life? Do you want a simple life? Because anytime you're thinking about doing something business-wise, wealth-wise, because I always say the tax code is a cheat code to generating wealth, you have to think about, are you equipped for this? Do you have the capacity to deal with this? Do you have the educational background to deal with this? Do you have the overall wherewithal to deal with a situation? And because again, it can be really, really overwhelming at times. So again, he was like, man, you were right. This is really, really complicated. And I said, I know. And then he says, I'm cocky sometimes. It's not that I'm cocky. It's just, I've been doing this for a very long time. So I could almost hear your situation in 2 to 3 minutes, and I could almost judge whether you're kind of a good fit or not, or you might need to grow into a thing or get some more education and experience in a thing to be successful at it, meaning that it's profitable, it's sustainable. You won't be like me and go bald and pull your hair out and lose your mind when you're doing certain things. So again, you have to factor that in. Okay. So I wanted to talk about a couple of things you got to think about when we go to the end of the year to file taxes. Now, this is for our business owners, our side hustlers, our real estate investors. Now, a lot of times people do not think about taxes until tax season. And 9 times out of 10, if you're thinking about taxes in tax season, it's too late. You don't have any power. You don't really have any flexibility. You don't have any wiggle room. If you want to do anything to increase or better your tax situation, you need to do it before December 31st. Again, before 12/31 or the 12th month in the year, the last day of the year, which is December 31st, before the clock strikes midnight and rolls over into the next year. And the next year for this year is going to be 2026. So make sure you get everything in order. So I wrote down a couple of things for my business owners to think about before they do it. Now, one thing, because I got another call from somebody else saying they wanted to have tax strategy. And the one thing I said to them is, you will never be able to have good tax strategy if you do not have good books, a good bookkeeping system. And that can be with one of the major softwares on an Excel sheet, but you have a systematic way of categorizing your expenses, categorizing your income, categorizing the money that you put into the business. All right, because that's called a capital contribution. A lot of times people mess that up. Also categorizing loans that might come into your business as well, because during COVID, when people were getting PPP, they were miscategorizing their bookkeeping and it just made it a whole mess. But, you know, I have a lot of people that do it and they write stuff in a black and white book, and that is a good thing to start. But when we're talking about how can you go, unless you're really, really good and you summarize it up, if we can go back and look in, let's say, November, the previous month, what were your expenses in November? What were your expenses in October, what were your income or gross receipts or sales in November or October or January? And you have the ability to find that out quickly. That's not necessarily a good bookkeeping system. So you got to think about those things, right? So here are a couple things you should think about before going into the new year that could potentially help lower or reduce your tax bill. All right. Prepaying expenses. That is number one. Prepay your expenses. So if you got rent, you rent a location to operate your business. Let's say your rent is $500 a month. That is $6,000 for the year. If you have the money, you can now pay your rent in advance right now. So you can pay $6,000 in advance right now. You can then write that off on your 2025 taxes. So that's something you can do. Now, again, you got to have the cash flow for it. So your business has to be in a pretty good situation to be able to handle an expense in December of $6,000 in advance, but you're going to pay that rent in advance. So that's one thing you can do to get ahead of taxes, right? Because then you get to write it off. All right. One thing you can do, not everybody can do it. You can stop billing your customers. So in December, let's say you bill them monthly, and you say, you know what, I'm not going to bill you now. I'm going to wait to bill you until January. So we're going to skip it, and then we'll pick back up. You're not going to lose out on the money, but you're just going to kind of send double invoices in January of 2026. Then that way, lowering the overall income you would have made in 2015. So it's kind of like deferring income for 30 days or 60 days or so. It's not, again, let's say it's $500, right? So instead of reporting that $500 in the tax year of 2025 right now, you are not going to report that until the tax year of 2026. So you get to push that off a little bit. And if these numbers don't apply to you, whatever your numbers are will apply to you. Okay. So another thing a lot of people do is they might buy equipment, office equipment, maybe a new laptop, maybe a new computer. I am in the process of renovating my office. A lot of you know my father passed. I'm in the process of renovating his office. That will now be my office. I'm trying to get everything done before the 31st, or at least paid. I'm thinking about buying new computers, new renovations. I might have to get some furniture. Probably won't be able to do that because then I got to figure that out, pick that out. But these are things I can do right now to say, you know what, I can get in advance of this and I can help lower my overall tax bill. Now, a lot of times people don't think about that. But you have to say, well, how is my furniture? Do I need new furniture? I just threw out a bunch of furniture, a bunch of old furniture that was kind of old, busted and disgusted. That was a little outdated. There's a couple pieces I did keep, though, that my dad had that I wanted to keep for memorabilia and nostalgia's sake. But, you know, there's going to be other things. I want to need a new desk. So that is definitely something, if I know about it and I can pick through it and figure it out in enough time, I can pay for it now instead of waiting until January and beyond of 2026. Now, I want to know, though, are you thinking about your taxes? Are you thinking about lowering your tax bill? Throw that in the comment for me. Thank you. All right. Now, here's something else you can do. Instead of using your cash to pay for something like that furniture or anything else, you can use your credit cards. Because remember, making or accruing an expense isn't necessarily taking the money out of your bank account or taking the cash. You can use it with your credit card. And let's say you pay it now. It's, I believe, December 2nd. The bill, you know, everybody's credit card cycle is going to be a little bit different, but the bill won't be due for at least 30 days. And then so you didn't get to defer that payment until January of 2026. But you can claim it in this year because of how it goes, how they treat credit card payments and everything else. Excuse me. Now, here's one of the things I see a lot. A lot of times some people think that they are taking too many deductions. I run into this a lot with a lot of my real estate investors, especially when dealing with real estate investors who are thinking about getting their taxes done. They want to show a higher profit because they want to be able to prove, air quotes, prove to the mortgage companies that they can afford to make payments on that mortgage and they won't default. And so they're always trying to play the game of, I don't want to pay too much in taxes, but I also want to show the mortgage company that I am a good credit risk and I won't default or write bounce checks on these mortgage payments. That gets really tricky. I've seen mortgage brokers actually with me. They try to get me to inflate the expenses. Well, excuse me, let me back that up. They try to get me to inflate the income, the overall revenue, so they can show that they are not making so much money. And the way that they do that is by not reporting as many deductions. And then they will want me to come back and do what's called an amended return. Because if you make only your tax return, you can go back and correct it and fix it. And that's called an amended return. And you file that on a 1040X. So that's something you can do. However, when you do it like that and you do it intentionally, it's fraud. When you intentionally are not reporting something just so you can take out a loan, it's fraud. And FBI does not look at mortgage fraud favorably. So keep that in mind, y'all. Keep that in mind, y'all. And again, if you're watching this, do me a favor, share this out. We want to keep this going. We want to make sure more people are getting more tax education because, in my opinion, the most important financial transaction you can make in your lifetime is anything dealing with taxes, because they're not going away. When you buy a house, you got to pay taxes. When you get a paycheck, you got to pay taxes. If you get a bonus, you got to pay taxes. If you win the lottery, because I know Powerball is pretty high up there now, you got to pay taxes, right? So a lot of times people don't want to think about taxes because it's boring. And I know I'm a nerd. I'm a tax nerd. But I'm a tax nerd because this thing impacts every facet of your financial life. And so, in my opinion, it behooves everybody to be at least somewhat tax conscious about what's going on with the situation, right? But again, these are the things you want to stay on top of, and you don't want to do anything loopy. So like I was giving you tip 5 about not taking too many tax deductions, right? There is no such thing as taking too many tax deductions. What you want to do is you want to take, and we talked about this last week, you want to take the ordinary and necessary expenses that are real and legit and legal that you can take and apply to your overall business. And that will help you save money on your taxes. Now, again, you got to do what's right. You got to do what's right. And I just said a couple of minutes ago that you got to think about what your overall bill is, and you got to think about taxes way in advance of tax season. And in order to do that, if you're a business owner, you got to have good books. I can't stress that enough. You got to have good books. What are books? Books are, how do you track your income? Books are, how do you track your expenses? How do you track the money coming into your business from services and products that you are delivering to your clients and customers? How are you tracking the expenses that you pay to your vendors, your employees, your contractors to make your business run? You need to be able to do that and report on that really simply, really quickly. You need to have a systematic way of doing that, all right? Now, next one on there. Figure out if it makes sense to improve your office or your, let's say, real estate investment. If it needs some improvement, it might make sense to do it now. Again, a lot of y'all know I just did a renovation. I had to get a new roof. So I was working on a lot of this stuff already because I had to get a property ready to be rented out. All of those things I get the write-off on my 2025 taxes. So now I will say this. I do need to go because this is a new thing. I got to set up my own bookkeeping system for that. I kind of got the bare bones of it or the foundation of it set up because I have the bank account. I I run everything through the bank account. I run everything through the debit card that's attached to it, and then I track it. Now I just have to go through and categorize it. So once you have a good foundation for it, it becomes a little bit easier, even if you are not on top of it every day of the week. If you, let's say, I would say at least monthly go over it, that's good. Quarterly, that's okay. Even if you wait a whole year, and I've seen people go years without doing it, but you can still kind of pick up and go through it quick, maybe through a weekend or something like that. But the best thing to do is try to stay on top of it and do it once a week. So keep that in mind, y'all. Keep that in mind. So again, improvements to real estate, whether it's roofing, whether it's flooring, anything that's kind of a permanent thing in your real estate property or even your business, that's something that could really, really help you out in the long run in your taxes. All right. So let's see. I got a couple other things for you to go through. I wrote all these down. But another thing you can do, insurance. You can write off your insurance as well. So you can prepay your insurance. Like I said, prepay your rent. You can prepay your insurance. You can prepay your cell phone bill. You can prepay some of your utilities. So that's something else that you can do. So we went over a couple things, right? Prepaying rent, prepaying utilities, prepaying insurance. That's one thing. Also, we said, I got to go back and read it, y'all. Make sure, not make sure, you can pay things on your credit card and not have to pay it right now. You can pay it next year. So that's one thing you can do. All right. You can stop billing your clients. All right. You can say, I'm going to take a month off. I'm not going to bill you right now. I'm going to bill you in January. Now you still owe me money. I'm not giving it to you for free. You still owe me. You still got to pay me. All right. But, you know, you can do some of these things. And these are just like really, really simple things. These are low hanging fruit that anybody could do in their business. All right. Now I'll come back and talk to you more about some other tax saving things that you can do. But if you haven't done so yet, make sure you're going over to Tax Tuesday on YouTube. Make sure you give me a subscribe if you like what we're doing over here. If you like what we're doing over here, give me a subscribe. And we're going to keep doing this at least once a week, And again, if you have any questions about taxes, this is the day. This is the tax day, Tax Tuesday Live. Go ahead and throw them in the chat if you have any questions. And again, if you're watching this on the live, feel free to shoot me an email, taxtuesdaylive@gmail.com. Again, taxtuesdaylive@gmail.com. And I will make sure that I add those in the overall show when we do these. And I will definitely answer those. Okay. Now, again, we went over a couple of things. We went over the Trump promise to eradicate income tax, right? We talked about that with tariffs. I don't think it's going to happen, but, you know, some people think it will. I don't. Also, you know, I showed you another clip about tax on tips, tax on overtime. Well, we found out that it was promised, but it's not going to happen. So again, if you are a person that gets tips, if you are a person that works overtime, you still have to pay tax on it. I'm sorry to tell you that. All right. My man Lawrence is in the building. What up, Lawrence? Let's see. Tax returns are going to be nice in 2026. Yeah, I guess. I think some people are going to be shocked that some of the things that were promised will not happen. Again, like tax tips or no tax on tips, no tax on overtime. That's going to happen. And I'm going to come back. I'll do a show on all the new tax changes with the quote unquote new big beautiful bill, or what I call the new big beautiful bill for rich people. But I'm not super impressed by it. But again, it's a point. Like I said, taxes impact every part of our financial life. It behooves us to pay attention to it way more than the way we pay attention to it. Every day on the news broadcast, they talk about the Dow Jones this or the S&P 500 that or Bitcoin that. But every time you sell stock, brother, or Bitcoin, you got to pay tax on it. I know that's not sexy. That's not fun. That's boring. But hey, if you really figure it out, this whole wealth game is typically boring. All right. Thunder's in the building. Thunder, what happened to your name? Thunder JH7XU. What does that even mean? What up to you, man? How are you? Lawrence, I take it that you're happy. So what exactly are you happy about with the tax bill? Not too much on the big back bill. All right. I mean, listen, man, it can be, listen, it's going to be interesting. Taxes are always going to be interesting. And that's why I say, you know, we should be really vigilant about it and not just getting a refund. Matter of fact, I will say this. If you are worried about getting the tax refund, more than likely you're killing your opportunity to create wealth. Again, if you are worried about getting a big tax refund, you are more than likely killing your opportunities to generate wealth. Why do I say that? Well, I always say the tax code is a cheat code. All right. Again, there's nothing wrong with a refund. Sadly, many big corporations have programmed many of the overall public that say, hey, I want a big refund. Sometimes, as I talked about earlier with the whole mortgage scenario, they will underneath deductions overstate revenue or sales or overall money coming in. That's a lie. Right? Here's another secret. If you file a false tax return or a fraudulent tax return, there is no statute of limitations on it. It's like murder. They can always come after you for it. So if that's the case, why even play that game? The government has a lifetime, because I mean, I guess the statute of limitations will be if you die, but they have your lifetime to come back and wreak hell on your life. Nobody wants that. In my opinion. All right. But again, I say it wreaks havoc, tax refunds, wreaks havoc on your wealth creation possibilities, because again, a lot of times you are understating things or you're trying to do things that you shouldn't really do. Again, another example is I see people who want to get the big fancy smancy house, but they can't really afford it. Now, if you got decent credit and you got some verifiable income and all of that, the mortgage companies a lot of times will say, hey, you can borrow as much as you want. But nobody ever says, hey, you probably don't need a 4-bedroom house when you don't have any kids and you're single. I know it looks nice. I know it's sexy. And yeah, the pool, yeah, that's nice too. But nobody tells you, oh, you got to clean that thing out and you got to have it serviced. It might be out of your budget. Oh, here's the thing. Do you even have a budget? But nobody's even really thinking about that a lot of times when you're buying a house. And so you're going after a thing that you shouldn't even be going after. And again, these are some of the games that some of these big corporations that provide tax preparation services, I don't want to say no names, I don't feel like getting in no trouble, but these are the things they're promoting for. You'll see people like jumping out of airplanes and say, hey, did you get your big tax refund today? That's why you see big lines at certain places every time when tax season comes around, when the W-2s first come out, and you see people. Here's another one. When you see people who try to file their taxes with their last pay stub, not supposed to do that for a lot of reasons. You're not supposed to do that, but we'll definitely get all into that. All right. I see Lawrence says something else. Tax brackets are solid. Based on my estimation, I'll be paying $5,000 less in tax due this year over last year. Okay. And I bet you are also going to try to max out your 401k, 403b, 457, whatever you may have. And, every year, that's one of the things that we see every year with our taxes is that the brackets change. The tax brackets change. Usually your 401k or your IRA contributions go up. I want to say it's 25 or 26,000. Has anybody looked at that yet? What the max contribution is to your 401k? I'm going to look that up real quick and I will come back because that's something that a lot of people should do to reduce their tax bill. All right. For 2025, the max 401k contribution is $23,500. Those who are over 50, it's an additional 7,500. So what's 23,500 plus 7,500? So that's roughly, I want to say $31,000. If you are over 50, you can sock away. Helps reduce your tax bill. It allows that money to grow tax-free until you pull it out and, you get to invest it. So again, it can be great. It can be great. Something you got to think about. Also, everybody should read their employee handbook. There are a lot of jewels in the employee handbook. If you have a 9-to-5, that a lot of people miss out on. All right, a lot of people miss out on. What up, Nia? How you been? How was your holiday? How's everybody's holiday? Did y'all over turkey? Did y'all OT? Did y'all OD? Did y'all over drink? I had a good holiday. It was weird for me. This was my first Thanksgiving without my dad. Normally, me and my father would spend Thanksgiving together. So it was a little weird, but I got to spend time with my aunt who kind of raised me as well. So it was bittersweet. It was bittersweet. All right, Thunder says, what if you're leaving your job and want to pay off some debt and put the rest in your IRA? So you got to be tricky. You got to be careful with that because if you pull the money out of your, let's say it's your 401k, 403b, 457, whatever your retirement plan is with your job, they may come back and tax that as income. That could get a little squirrely if you take the money out of your IRA. Again, that can be a little squirrely too. You'll be hit with tax if you are under 59 and a half. Again, under 59 and a half, normally you will get a 10% penalty. So if you take $5,000 out of your IRA before you are 59 and a half, you're going to pay $500 immediately off the top. And that does not include what you pay in taxes. So you're going to pay $500 in penalty plus you're going to have to pay whatever tax that's associated with that. And then also long spread of tax brackets, right? So your tax brackets fluctuate. So you have a floor and you have a ceiling. And this is just hypothetical. Let's say when you make $50,000, you pay, let's say 20% in taxes. But when you make $55,000 in taxes, you might pay 22 or 23% taxes. So you have to be careful about what you are going to do to your tax brackets when you take money out or when you make extra money, even if you have an additional job. So those are things you want to think about before you make moves. Listen, everybody should talk to their tax person before they make a move financially. Why? Because it impacts you, your money, your bottom line. And so instead of waiting till later, so after you've done it, figure out what it is in advance so you can prepare for it. Sometimes it makes sense to not even do it or maybe delay it. Again, we talked about end of year tax season savings or techniques that you can employ. I have advised people a lot of times when they thought about pulling money out of their IRA at the end of the year, I say, wait, do it in January or February so we can go to the next tax year. We have a whole year to prepare for it, whether it's you want to pay more estimated payments, meaning pay more in taxes because now you know what your tax bill is going to be, or you say, you know what, I can do some other things. It all depends. It all depends. All righty. All righty. So Thunder said it is a 403B. Okay. So you work for a nonprofit. So that means you are a good citizen, sir. And you are out here helping the world. So thank you for that. Thank you. All right. Let's see. What if you pay down your mortgage to make it under 100K with your retirement account? Um, how can I best say this? I see a lot of advice about paying down mortgages. Okay. Some people say financially it never makes sense to pay down your mortgage because you lose some of your tax benefits. I also say, like I'm saying, taxes are something you should always think about. You should also think about how debt and how your emotional health is impacted by your money decisions as well. Some people really hate having debt. It really keeps them up at night. And then so if it keeps you up at night and you have the wherewithal to get rid of it, then sure, get rid of it. If it doesn't matter either which way, then go with your best financial decision. But you know, there's some things you got to think about. You got to think about. All right, Lauren says, my wife switched jobs. Remind people to make sure that they don't go over the contribution limits on 401k, 403b, or 457. Yeah, that can be tricky too. So I work with some people who are quote unquote overemployed. If you go back on my YouTube channel, there's an interview I did with a guy by the name of Alex who founded a community of overemployed people. Overemployed people are people who intentionally have two 9-to-5 jobs at the same time. And so many times what happens is, and these are 6-figure earners, so they blow out the 20,000, 24,000, 23,500 max 401k contribution or 403b contribution. And so it gets a little tricky. And so anytime you go over, you got to pay tax on that money. So again, you got to be careful. You want to plan these things out. Now, listen, it's not the worst thing in the world if you've got two jobs making $250,000 for a grand total of $500,000. But when you get hit with an unexpected tax bill because you were saving for retirement, you were doing all the good things, and then boom, you're like, hey, I contributed extra $25,000 that they're not going to tax me on. Or you have to do what's called recharacterize, but you got to catch it early. That's why you got to be on top of it. It's not that fun. It's not that fun. All right, Lawrence also says, make sure your tax professional also gives you forward-looking advice. Yes, but in order to do that, what I see is people only think about their tax professional during tax season. You should be reaching out to her now, or if you haven't done so already, you should make this one of your favorite people. By the way, tax professionals take tips. We accept food, cookies, even though I don't need any more cookies because I'm already in the Fat Boy Club. I'm trying to escape, but be nice to them. Be nice to them, because nobody truly understands their job, and everybody thinks their job is one thing, but in actuality, it's another thing. Shout out to The Wire if you caught that reference. But be nicer to your tax pros. Be nicer to your tax pros, y'all. And be proactive about your taxes. Be proactive about your taxes. I can't stress that enough. I can't stress that enough. And start getting educated on it. Now, if anybody has any other questions about taxes, feel free to throw it in the chat. Again, if you're watching this on the replay, go ahead and shoot me an email over at Tax Tuesday Live at gmail.com. taxtuesdaylive@gmail.com. And if you want to join my school community where I'm going to be talking about taxes and supporting taxes and mentoring people on taxes throughout the year, going over to taxtuesdaylive.com and join the community. It's free right now. It's free for now. That's going to change. But you're going to see all kinds of stuff in there. We're going to do planning sessions. We're going to do all kinds of stuff in there. But going over, join now, join the community, and you won't regret it. All All right. Well, again, I hope everybody had a great holiday. Hope they spent some time with the family. I mean, the main reason why we work so hard, or at least we're supposed to work hard, is to benefit our family. So make sure you spend time with the ones you love, cherish them, because they're not always going to be here, y'all. So nobody or tomorrow's not promised to anybody. So just keep that in mind. And again, I appreciate everybody joining in tonight. Thanks for all the questions. If you have more, I will be back next Tuesday. I'll be back tomorrow for some other financial stuff on the Overall Financial Rebel channel on YouTube. Again, if you have any questions about taxes, feel free to send me a email, taxtuesdaylive@gmail.com. Have a great day, everybody. It'll be great. Oh, just a thank you. All righty. Y'all be great, everybody. So long.